The U.S. banks. So U.S. banking earnings are coming out fast and furious. J.P. Morgan Chase came today. Goldman is going to be next week. B of A is coming. Wells Fargo came today. I will look at the individual charts of those stocks as well, because that's a that industry, obviously banking and finance, is probably the most important industry, one of the most important industries anyway, because without loans, without banks, without ATM machines, checking accounts, all these things, those are the things we use on a daily basis. And, the health of the banking system really interests me on a much deeper level. But then for you guys, maybe it's just having a checking account or a savings account or a CD or something like that at a bank. Well, banks do a lot more than that. And then you guys should start studying how banks function, right? They have many different departments, obviously, but banks, if you take a bank and figure it's a human, turn it upside down and shake it, 2 red cents will not fall out of their pockets. How? Why? Banks are worth whatever their loan portfolios are worth. And obviously they have investing and trading arms as well, such as Goldman and all the banks do. They take risk, obviously, with your money. But the banks are a simple business. Banks borrow from you when we had ZERP at 0% pretty much, and they tack on 5%, 4% on it, and then they'll put out loans. That's it. That's what the banks do, right? We know what happened in 2008 to the banking system because of the housing crisis, right? Hopefully we'll never experience that again. But then the Fed came to the rescue, printed trillions, and then saved the system. But you guys should study it. You guys should study how banks work. How it's not as simple as you think it is. It's really, really a complex infrastructure. It's really a wonderful system. But I wanted to talk to you guys on the first topic about U.S. banks under pressure as J.P. Morgan Chase, B of A, Wells Fargo, Goldman Sachs, and Citi battle shrinking margins. That's a fact. The reason they're battling shrinking margins is because, Fed raised the rate from 0 to 5. Well, when they raised the rates, what happened to the mortgage rates? The banks had to raise the mortgage rates because now you go open a CD account at a bank, right? Or a savings account. Well, they're paying you 4 or 5% as opposed to 0. Now they have to raise the mortgages that they're going to put out with the money, with your money, basically. So what banks do is that, they sometimes they leverage themselves, but basically if you go deposit $100 in a bank, they immediately take $90 of it and put loans out with your money. And they tack on a margin onto that, which is usually about 3% levels. So when rates shot up, loan demand obviously collapsed, right? Housing, mortgages, businesses. When that happens, they need to compete harder. They need to start lowering the margins, that 3%, maybe to 2%, maybe to 1.5%. So the earnings are coming out this week, and I have to watch, and I have to pay attention to. So JP Morgan is expected to reveal a nearly 8% drop in earnings, and their earnings came out today. So we're going to, look at the chart. While Wells Fargo will likely report a nearly 14% drop in earnings per share, and citing data compiled by the London Exchange. But next week, B of A, right, to report an approximately 14% drop in earnings per share. When they say earnings per share, don't misunderstand. We're talking about quarterly earnings, right? Not overall. And Citigroup is expected to report a 20% drop, and Goldman Sachs is expected to report 35% drop. That does not mean their share prices are going to go down, because mostly they're priced in already. The across-the-board decline is due to a combination of rising deposit costs, just like I mentioned, right? You put the money in the bank that were paying you 0. Now they have to pay you 4 or 5. Well, the margins are getting squeezed. So weak loan demand and shrinking net interest income. Net interest income is when they take your $100 deposit and take 90 of it and put out loans. That's the net interest. So they're paying you 4. They put out a mortgage at 7. or 6.5. That's the net interest income. And from that, that's their gross net interest income. Obviously, from that, they have, hundreds of thousands of employees and buildings and infrastructure and all that stuff to run, right? So all that has to come out. That's why the earnings are kind of getting squeezed. Although banks are feeling pressure from decreasing margins, which is then related to NII. NII is net interest income. They are expected to generate strong revenues from other banking divisions, such as investment banking and trading. Well, we know that. Why? Because next topic I'm going to talk about is the market. What has the market been doing? Wonderful. Every day, all-time high. I think today is the 45th all-time high that we're hitting. So Goldman Sachs, being the best traders on the planet in anything and everything that's moving, truly spectacular. I mean, seriously, Goldman is the king of Wall Street. And when it comes to trading, anyway, they have the best minds, best of everything. And so that's kind of helping alleviate a lot of this margin pressure. So please go study banking, how the banking system works, because it's part of our daily lives. Without banks, we can't do it, right? And how banks function. Start, learning about these things. Start talking about these things.